German Finance Minister Wolfgang Schauble recently announced plans of more cutbacks for Germany to prepare for a weakening economy and possible fallout from the euro crisis. Joining me on the line to discuss this further is Jeremy Cook, Chief Economist at World First. Hello, Jeremy. How do you think further cutbacks will affect the German economy in the longer term?
Well, I think that we're seeing, obviously, generalised signs of austerity across the Eurozone, and we are going to see cutbacks start to impinge on growth over the early part of 2013. The fact is, with the German model, which differentiates it basically from everyone else within the Eurozone, is their strong export basis is managing to maintain some form of momentum. Granted, we've seen a dip in the last part of 2012, but it's still forming an early lead up in 2013. And what the reason for this is because of their strong, able export markets out in the Far East and in the Middle East to a certain extent. So as long as they continue to grow, as long as the Chinas and Koreas continue to grow through the course of 2013, then the cutbacks will obviously hurt, but I wouldn't think damage the economic picture in Germany too badly.
There are also plans to raise taxes. Finance Minister officials propose increasing the reduced VAT rate of 7% to the regular VAT rate of 19%. What are your thoughts on this?
Well, VAT increases have been very, very popular as far as tax rises in this new age of austerity. We've seen it obviously happen here in the UK. We've seen it happen in Japan. We've seen it happen in Spain. So for it to follow over in Germany is probably a natural ascent. To be honest, I'm not a great fan of VAT. I do believe that a regressive tax, the poor pay more as a percentage of their income than the rich. So there is a political issue around this, obviously, in so much that Angela Merkel could be criticised by lower income voters later on when it comes into the general election, because they feel that more and more of their income is being taken away in the form of VAT tax as opposed to the rich in income taxes, for example. VAT, it's likely to raise a fair bit of cash. The one thing about spending in the German economy is it has remained depressed over the course of the last part of 2012. We can see that from the PMIs. We can see that from the retail services sector figures as well. So it is difficult to kind of sequester exactly how much money will come from a VAT increase in Germany, but I do think it is likely to happen.
Do you think it is likely we can see a fallout from the euro crisis?
I think so, and it may not be this year, it may not be next year, but I still think that the longer-term problems that we have in Spain and the longer-term problems that we have in Greece can only be solved by an exit from the single currency area. Greece is probably, is obviously the favourite given the debt to GDP levels, given the bailout request that it will still need. We've had 3 bailouts for Greece already and a debt write-down. It's probably going to have another debt write-down within the next 12 months and another couple of bailouts within the next 2 or 3 years or so. And the political will to be able to do this will start to fade away over the course of the next couple of years. So I think that in 2014, maybe 2015, politicians around the Eurozone say enough is enough, and Greece is forced to leave. The market impact of that would probably be fairly negligible, given the ongoing crisis that we've had in Greece for the best part of 3 or 4 years now. Spain is obviously a different issue because of the size of it and because the banking sector attributed towards the Spanish economy as well. We do expect them to take a bailout. We do expect the OMT program to go in and start buying Spanish debt later on this year. I'd say the odds on Spain leaving the Eurozone are probably about 40% at the moment.
And what are the biggest and most concerning issues facing Germany's economy now?
It ties in with the question about VAT in so much that they have to, much like everyone, try and get consumer confidence going, try and get business confidence going. Business confidence has started to come back. We've seen that from the ZEW, we've seen that from the IFO figures over the course of the Q4 in 2012. So that's on the up and up. Obviously, the tying into exports, they need to make sure that exports are still going out to the places that are growing, but intra-EU exports start to increase, as well as we may see some growth start to come around in some Eurozone countries. And obviously the election later on in the year. I don't think anyone out there is predicting anything but a win for Angela Merkel later on in the year. We may see some wobbles around that as we get close to the election, as we do with all elections. But in the longer term, the economic issues in Germany are minuscule compared to that of obviously the rest of the Eurozone.
Thanks for joining me, Jeremy. Here at Dukascopy TV, we'll be keeping you up to date with the latest financial news. For now, though, goodbye.